Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Friday, everybody. Today's March 7th, 2025. Happy Jobs Day, everybody. We just got the Non-Farm Payrolls Report for the month of February, aka the Jobs Report, a very important statistic. And, well, it was a little bit disappointing, but it wasn't as disappointing as many were fearing. So there's a little bit for the Bulls in there, and there's a little bit for the Bears in there. Bears in there. Yeah. Let's talk numbers. 151,000 jobs added versus expectations of 160,000 added. So below expectations, but just barely, and better than the 125,000 that we had in January. So again, depending on your point of view, it's a good report, it's a bad report. Now, there was some other things in here. In particular, unemployment ticked up to 4.1%. Not good. All right. It was 4.0% last month, a slight uptick. And as my moderator, Mish, was very astute in pointing out this morning, unemployment ticked up to 4.14, which means we are like right on the cusp of rounding up to 4.2. So we just barely dodged a bigger increase in unemployment. Also, there's some other numbers, some other stats that we're going to get into later in the stream that you're going to see, guys. There really wasn't a lot to celebrate in this jobs report. And it's kind of par for the course. It's been like that for really the last 2 years. I mean, even though the headline number says we're adding jobs, they are the wrong kind of jobs. They're not jobs that are going to help people make mortgage payments and things like that. So economy remains on shaky ground, although this is not the statistic that is going to trigger the crash and the meltdown. Other news going on, we've got the strategic Bitcoin reserve was announced last night. Finally, President Trump announced it. He's been creating working groups and cautiously optimistically talking about this. We haven't had much clarity, but he actually signed the executive order creating it last night, and Bitcoin sold off on the news. What gives? Well, the devil is in the details, as always. Like we said on this channel several times, the strategic Bitcoin reserve is going to be made up of Bitcoin seized during prosecutions and from criminal activity, and that the government will not be buying Bitcoin with taxpayer dollars. Now, I've talked about this a lot on the channel, the legality of the strategic Bitcoin reserve. If they were going to go buy Bitcoin, they'd need Congress for that. And I don't know if you guys have checked in. Congress is very, very busy doing absolutely nothing right now. So they're going to have a hard time making time in their schedule to actually sign a bill to do that. And I also had been saying that it's stupid to print money and buy Bitcoin with it. Yes, it's just outright stupid. And so I was not at all surprised by this announcement. I kind of figured that's where it was going to go. Apparently, some of the Bitcoin bros were a little bit not a little bit. Some of them were a lot of bit disappointed. They were hoping J-Pow go burr and use the money to buy Bitcoin. Not going to happen. Also very interesting, they created a separate national crypto stockpile that they're going to put things like XRP and Ethereum in. Why would they make them two separate things, and why would they use two different languages? I think the Bitcoin maxis probably are happy to see that, and I think the Ethereum guys are like, hey, how come you made Bitcoin separate from us? Well, because it is. That's just my opinion. Anyways, a little bit of disappointment in the crypto sphere from that. Tariffs are on again, off again. We got another delay, but a partial delay, and only for somebody. I tell you, the market wants certainty more than anything, and the only certainty in this market is uncertainty. Right now, according to this article in CNBC, they have exempted goods covered under the USMCA, or the U.S.-Mexico-Canada Agreement that was signed during Trump's first term, which is a major percentage of Canadian and Mexican imports, roughly half, that will be exempt from these tariffs until April 2nd. So we got a 1 month delay on half of the stuff from Canada and Mexico. The stuff from China, tariffs as planned. So, they're still going about the tariffs very clumsily, very haphazardly. One day it's one thing, the next day it's something else. Tariffs is a big issue punishing the market right now, but honestly, there's something else at play in market, the underlying tones in the market. First of all, sentiment is more bearish than I've ever seen it right now, even though the market has only fallen about 6.5%, 6.7% from its all-time highs. Bearish sentiment is through the roof right now. The S&P is sitting right on the 200-day moving average. So if ever there was going to be a bounce, it would be a day like today. At an important technical level, we got a little bit of optimism on the tariff front, emphasis a little. We got a jobs report that wasn't as bad as some were afraid, and we've had a pretty substantial sell-off in the last couple of days. So the market is ripe for a bounce here. I don't know if we're going to get it, but if anything, it'll be today. But there's a lot of statements coming out of like Treasury Secretary Scott Bessent is using phrases like there might be some pain for the economy because the economy needs to detox. All right. And other things like, cheap goods is not the American dream. The American dream is upward mobility and prosperity. These are not things that people who are bullish stock market would say. And actually yesterday, President Trump specifically said he's not looking at the stock market. And talk about a freaking 180 from Trump 1.0 and Trump 2.0. Remember all the times President Trump stood up there and bragged about his stock market and the all-time high and how well it was doing? And contrast that with Trump's second term with a little Biden squeezed in the middle. Second term, he's saying, I'm not looking at the stock market. Guys, we talked about it earlier this week. They look like they are trying to engineer a recession here. They're trying to engineer a market crash. It's almost like they want asset price deflation. Now, I agree with them. I think that is the best thing for the country here. I do think we need to go that direction. This ridiculous everything bubble combined with the suppression of real wage increases has been catastrophic for 90% of the population. A very isolated few have done very well. That being said, I don't have a lot of confidence in Trump and his team to perform this delicate brain surgery on the economy with the sledgehammer that they're using. So I think they are right to be saying expect pain, expect the detox. I'm just very surprised to hear it because politically, this is terrible politics. I mean, it's honest and I think it's good for the country, but it's horrible politics. Only somebody who is in his second term and not up for re-election would do this. And of course, Congress, who is perpetually up for re-election because no term limits, they'll probably get in the way and try to stop it. And the Fed will pivot dovish at the first sign of trouble, as they always do. So they've got their work cut out for them here. On top of that, we've got Broadcom earnings came out yesterday. It was a big beat on the top and bottom line for Broadcom. Their stock is up big, although it was up bigger last night. It's given back a lot of those gains. But wait until you hear what Broadcom CEO Hock Tan said on their earnings call. Oh boy. Wait until you hear this. Guys, the AI industry is basically like the AI hardware industry. At this point, I'm convinced it's like half organized crime. You've got some legitimate use for data centers, and then the rest is just accounting fraud, export controls violation, and freaking money laundering. I mean, it's really disgusting what this industry has done. It is the biggest asset bubble in history. It is going to be so painful when it bursts. Tried to warn people. That's all I can tell you. And coincidentally, CoreWeave denied the story in the Financial Times about Microsoft walking away from some data center contracts with the company. CoreWeave referred to it as false and misleading. And in totally unrelated news, Theranos denied misleading Walgreens. Why don't we shrink my big melon of a head and let's see what's going on in markets this morning, shall we? And guys, this is about the point where I would say hit that like button and that subscribe button for the YouTube algorithm because we do this one every day. So come on back and have your coffee with the Melon Heads tomorrow. Right now, we are in extreme fear. We talked about this one, guys, about how the market sentiment is so deeply negative right now. An 18 on the Fear Greed Index. I mean, typically, we only ever dip into extreme fear very briefly before the dip buyers show up and take us right back into extreme greed. This is further negative than I've ever seen it. Again, guys, when the sentiment gets so negative, you are ripe for a correction to the upside. That being said, this market really needs a big correction to the downside, but I would expect some buying eventually at this level here. The S&P right now, though, heading lower. It was positive off of that jobs report. Right now, it's down 20 points, or about a third of 1%. Look at this candle here. We have a big wick. The market did jump up. It looks like about 35, almost 40 points on that jobs report. It was viewed as a slight miss, maybe a little bit of optimism about the Fed staying dovish, but that has quickly faded, and the market is heading lower now. Now, take a look at the long-term chart of the S&P here. This is as of close yesterday, and we're looking at daily candles. And I just want to point out, guys, we are sitting pretty right here at the 200-day moving average, a major technical level. Once again, if we're going to bounce, I would expect the bounce here. A breakdown, especially a weekly close below this level, would be a very bearish indicator. So it's going to be an important trading day here. And meanwhile, the Dow is down 178 points, or about 0.4%, and heading lower. Again, the gains off of that jobs report were short-lived, and now we are heading into the red. And the NASDAQ is off by 43 points, or 0.2%, also heading lower here. Meanwhile, the DXY is a little bit lower. You can see maybe a little bit of optimism about the Fed here with the weaker dollar. But then again, we've also got a surging euro and a surging yen that are contributing to this decline in the Dixie. Now we got a 103 handle. That's the first time in a while we've been in the 103 range. 103.70, off by another 51 basis points this morning, or about 0.5% lower. Looking over at the bond market, we've got lower yields. Once again, Treasury Secretary Scott Bessent is getting his lower yields that he wanted. I'm not sure he's getting them the way he wanted, but he is getting what he wanted. The 30-year Treasury, 4.537. That's lower by 4 points and change. The 10-year is off by 6.6 points here, 4.216 for the 10. The 2-year is off by 6.5 points at 3.898. And the 1 month is off by 0.5 point at 4.306. Yields are lower virtually across the board here. Looking over at commodities, we got a mixed bag this morning. Spot gold is essentially unchanged, holding above 2,900, 2,913 for spot gold. That's up a little bit here this morning. Spot silver not doing as well, 32.24 for spot silver, down about 39 cents, or 1.2% lower. I like the shiny. Copper, meanwhile, down 1.9%. Platinum is down 1.1%. Palladium is off by about 0.4%. And crude oil is catching a bid here, 67.25, up by about 89.90 cents here, 1.36% higher. Second day in a row, we've seen gains for crude oil here. Keep an eye on that OPEC deal, though. I do think oil prices are still heading lower in the long run. And speaking of oil, there was a proposal being floated here. The Department of Energy is requesting $20 billion to refill the Strategic Petroleum Reserve. Remember that big oil dump that happened under Biden because midterms? Well, you got to buy it back at some point. Although if you're talking about cutting spending and reducing the deficit, asking for $20 billion for oil is not going to go over so well. So that's something important to keep an eye on. Also, guys, back on gold for a second, it's important to point out that China, the PBOC, added another 5 metric tons of gold to their stockpile for the month of February. That's the 4th consecutive month of China's central bank being a net gold buyer. They had taken a pause for a large part of 2024, but they are back and buying. Meanwhile, Bitcoin is slightly lower this morning, as priced on Coinbase. We're down by about $500, 89,394. We were above 91,000 at one point yesterday. Almost not. We did go over 92 at one point yesterday, but we gave back those gains. Also, look at the big wick here on this candle. You can see we sold off pretty good last night on that news of the strategic Bitcoin reserve. We went down as low as 84,600 last night. So the Bitcoiners were very disappointed, but some people came in and bought the dip. Let's talk about this. Bitcoin drops after Trump executive order disappoints market. Dated last night, updated this morning here. A simmering tension in the crypto industry resurfaced after President Donald Trump signed a long-awaited order creating a strategic Bitcoin reserve and an additional stockpile of other digital assets. The fact that they're separate is of note here. Even as crypto executives issued effusive social media posts praising the move, Bitcoin fell as much as 5.7%. The largest digital asset did pare those losses to around 3.2% as of 7:10 a.m. in London. 4 other digital tokens had previously been highlighted by Trump: Ether, XRP, Cardano, and Solana. They all saw declines as well. While the creation of the Bitcoin-specific reserve fulfills a promise Trump made on the campaign trail, the details fell short of industry expectations. I think those expectations were misguided. The orders shared initially as a post on X by the White House crypto czar David Sachs indicated that the government would not use taxpayer money to fund a strategic reserve of the digital asset. Instead, the reserve would be capitalized with Bitcoin already owned by the federal government, and any further acquisitions would require budget-neutral strategies for acquiring additional Bitcoin. In other words, Congress would have to be involved, and so the government won't be buying Bitcoin. Now, I was talking about this with Mish on text last night. I saw the market's reaction. In my opinion, it was an overreaction by the market. I don't think there was ever any serious likelihood that the government was going to be buying Bitcoin. Congress would have to be involved. The judges would have blocked it. But there is optimism here, because how many times have we seen a big drop in Bitcoin because overnight a bunch of Mt. Gox coins moved to a government wallet, or a bunch of Silk Road coins were going up for sale? And usually the government would time these things to stifle any rally in Bitcoin. Well, that's going to be going away now. The government is no longer going to be doing these strategic dumps of Bitcoin. Instead, they're going to be holding it. And so I think on the whole, this is net positive for Bitcoin. And I think the people who are disappointed probably weren't really paying attention to the way things are done in Washington, because this was the idea that they would buy Bitcoin. I just don't think that was ever very realistic. All right, let's talk jobs numbers, shall we? The big story today. United States non-farm payrolls shown here on Trading Economics. The U.S. added 151,000 jobs in February of 2025. That is up from a downwardly revised 125,000 in January. And you know what? I didn't even catch that downward revision. How big was it? Okay, it was pretty big. It looks like about 18,000 in downward revisions to the January number. I missed that one in my initial take here. Either way, guys, it's less than 160 expected. Even worse if you take away the downward revisions. But let's talk about some of the numbers that were pretty bad in here. All right, this is table A9 of the jobs report. I'm the only one who ever looks at this thing, apparently. But I think this is important. In particular, full-time workers, we went from 135.9 million to 134.67 million. 1.2, 1.3 million full-time jobs lost in the month of February. That is terrible. All right. This is the trend that we've seen for quite a while. I would also point out, guys, there was a big jump in full-time jobs from December to January. That's because that new census data took over in the month of January. So I wouldn't read too much into the January number, but the trend from January to February is important. So we lost about 1.2 million full-time jobs here. Now, we replaced them with part-time jobs, as we've been doing for years. We have 28.5 million part-time jobs in the U.S. That is up from 27.9, a gain of about 600,000 part-time workers. So, guys, this is the household survey. This is different from the headline number, right? That's the establishment survey. So that 151,000 jobs added, that's a totally different data point than what looks like hundreds of thousands of jobs lost in the household survey. I would also add multiple job holders went up by about 100,000. I mean, that just goes to show you the hardship of the average American here. 100,000 people had to get a second job in order to make ends meet. Why? Probably because they lost their full-time job and they had to get 2 part-time jobs to make up for it. That sucks. All right. That is not a healthy economy. And I think that's what Scott Bessent is saying when he says there's pain ahead. The economy needs to detox, because what we're doing now is not working for almost everybody. There needs to be a change, and you cannot break an easy money spending addiction without pain. So a little bit of honesty from DC. But that being said, it's not going to be very reassuring to people when they lose their jobs and lose their house, because that's also coming. Self-employed, unincorporated, aka gig work, that actually declined by about 127,000 here. So fewer Uber drivers, fewer Door Dashers, fewer OnlyFansers. Take what you want. Let's not draw too many macro conclusions from that data point. Also, the unemployment rate ticked up from 4.0 to 4.1. But it's also important to note that we are just a hair away from 4.2% unemployment, which is where we were in November. So keep an eye on that one. Unemployment heading in the wrong direction. A little bit of a disappointment there. Now, this number is one that you really want to worry about, though. The U6 unemployment rate. U6 doesn't get a lot of airtime. This is the one that measures underemployment. It counts the unemployed. It counts the unemployed who are marginally attached to the labor force, which means they're not looking for work, but maybe a year ago they were looking for work. And it also counts people who are working part-time for economic reasons, meaning people who want to work full-time, but they can't find a full-time job. And that jumped up big time in the month of February. It increased by 0.5%, 0.5% increase from 7.5% to 8%. That's 800,000 people went on to the U6 unemployment rate in that month. That is much worse than the jobs numbers added or the unemployment rate would suggest. So this is a rather alarming trend. You've got, what do we see? 460,000 people are now working part-time for economic reasons, or 460,000 additional people working part-time for economic reasons. And we've got 414,000 people marginally attached to the labor force, which is people who are not working, but within the last year, they were trying to find a job, but are no longer. This, again, reflects the reality in the jobs market. Things are getting worse, and that is a big step change for U6. Let's zoom out a little bit, guys. It's worse than it's been since, well, when's the last time? When you zoom out too much, you end up with the COVID data, and the COVID messes everything up. October 2021 was the last time we were this low, and obviously an alarming trend, to say the least here. And another big-time disappointment is labor force participation rate. That dropped to 62.4 from 62.6. And I would add 62.5 was a level that had been holding for most of 2024. And, well, we have just broken down below that level. So more people are dropping out of the labor force. That's people giving up, and that is people retiring out of the labor force, and not enough young people aging into the labor force to make up for it. And if we zoom out on this, you can, again, the chart kind of messes with you here when you get into what we saw. This chart is rolling over. The pandemic messes everything up when you zoom out. Participation rate heading lower, not a sign of economic prosperity. All right, so overall, guys, the jobs market, for the people who only read the headlines, it was a little disappointing, but not catastrophic. For anybody who goes a little deeper, there's a lot to be worried about in this jobs report. Now, let's talk about a couple of other things we got going on here. Trump tariffs. U.S. pauses tariffs on some Canadian and Mexican imports until April 2nd. All right, let's speed this one up a little bit because the tariff talk is getting a little long in the tooth. I'm sure there's a little tariff fatigue here, but this is arguably the biggest issue affecting stocks right now, and so we got to spend time on this one. Another exemption yesterday for goods that were covered under the U.S.-Mexico-Canada agreement, which was the big trade deal from Trump's first term. All right, so those will be exempted until April 2nd. Everything else is still getting the tariffs, and China is still getting the tariffs as of the beginning of this month. So this is a little bit of a walk back of Trump's tariff policy. The important thing here, Trump's tariffs will still apply to about 50% of Mexican imports and more than 60% of Canadian goods. So they carved out a little less than half of the stuff covered under a previous trade deal. Those won't get tariffs until April 2nd. April 2nd is still a big day now. So again, this is a step backward a little bit, or a step away from tariffs, I should say. I don't want to use forward or backward. Again, the market is still guessing because Trump is very much shooting from the hip here when it comes to his tariff policy, and the market wants certainty. It's not getting it. The president's exemptions only apply to goods that are compliant with the USMCA, the deal negotiated during his first term. Now let's talk about Broadcom here. This is interesting here. Broadcom shares soar 16% as earnings top estimates on demand for custom AI chips. All right, it was a beat on the top and bottom line for Broadcom. Stock is doing really well here. Broadcom reported first quarter earnings on Thursday that topped expectations, and the chip maker offered strong guidance for the current quarter. The stock jumped 16% in extended trading. It's giving back some of those gains now. Earnings per share was $1.60 versus $1.49. Revenue $14.92 billion versus $14.61 expected. So a beat on the top and bottom line. They also raised their guidance here. They expect $14.9 billion in revenue in the second quarter, higher than $14.76 versus compared to what analysts were expecting. Revenue was up 25% in the last quarter. So, hey, great numbers, right? Broadcom stock, though, it's only up 6.5% now. It's giving back those gains pretty rapidly. It was up almost 20% last night. It's going up in smoke here. Now, guys, there's something I have to say. All right, listen to this clip. And I got to send a shout out to my buddy Chase Merrill on X, who posted this. Good on you for actually paying attention. Listen to this question from CEO Hock Tan on Broadcom yesterday during the conference call when he was asked about export control violations and whether his export restricted chips are being sold to China. Listen to what Hock Tan had to say here. Also, guys, check your volume here. Sometimes when I play video clips, the volume's a little lower, a little high. I did my best to level it out, but just watch your ears here. But listen to what Hock says.
Got it. So none of those are going into China or to Chinese customers then?
No comment. Are you trying to locate who they are?
No comment. Ha, ha, ha. That's what Hock Tan has to say. Oh, so you're not blatantly violating export controls that are designed to keep these chips out of the hands of the Chinese military? And then Hock Tan, a U.S. citizen, CEO of Broadcom, a company registered in Delaware, headquartered in Palo Alto, United States company. This is what he had to say. Let's play it again. No comment. Ha, ha, ha. Are you trying to locate who they are? Like, oh, don't ask about sales to China. Of course, we're selling our chips to China, but oh, no comment. Listen to this again.
Got it. So none of those are going into China or to Chinese customers then?
No comment. Are you trying to locate who they are?
Oh, I cannot wait for that recording to be played in a courtroom someday and to listen to that little weasel MFer try to explain his way out of why he thought it was so funny that they are violating export controls, allowing these chips to be sold into China. This industry, guys, is propped up by so much crime, accounting fraud, export control violations, money laundering. This bubble, I cannot wait to watch these guys be carted off in handcuffs. Listen to him laughing about export control violations. No comment. Ha, ha, ha. So that's what he thinks of you. That is how little this American company and this American CEO thinks of American law. Gotta love it. Number go up. Also, AI firm CoreWeave denies contract cancellations with Microsoft. By the way, shout out to my buddy Chase Merrill on X who sent me that clip. Very good, Chase. Very nice catch. CoreWeave denies the Microsoft story, though. A shocking turn of events. IPO-bound AI cloud startup CoreWeave said on Thursday it had not seen any contract cancellations after the Financial Times reported that the company's largest company, Microsoft, had moved away from some agreements. We pride ourselves in our client partnerships, and there have been no contract cancellations or walking away from commitments. Any claim to the contrary is false and misleading, a CoreWeave spokesman told Reuters. All right, so false and misleading. CoreWeave denying the Financial Times story about Microsoft canceling contracts. And hey, coincidentally, on the same day, Sam Bankman-Fried is on Tucker Carlson insisting he's not a criminal. And so, oh, all right, yeah, sure. Oh my God! Again, it's the top is in, guys. This CoreWeave IPO is going to be a freaking disaster. Oh, I can't wait. I can't wait to watch it. It's going to be beautiful to watch. I just want to say thank you very much to Evan Francis. Lighten up, Francis. Sorry, I had to. I love that movie. Lighten up, Francis. He says the yen carry trade is coming back soon or already is. Watch that yen carry trade, guys. The yen has been strengthening. And more importantly, watch the interest rate on that Japanese 10-year JGB. Wow, that thing has been spiking here. The U.S. interest rate is coming down. The Japanese interest rate is heading up. Meanwhile, the yen is strengthening against the dollar. That means the yen carry trade is getting less and less lucrative. And look at this sell-off in tech stocks. What do you think people bought with their borrowed yen? If you answered probably tech stocks and crypto, congratulations, you've been paying attention. So the yen carry trade unwind remains an existential risk to this everything bubble. Absolutely, Evan. Good call, sir. Thank you for supporting the channel. And the dad, Dan. What's going on, Double D? He gifted 10 Nobody Special Finance memberships. Thank you so much for supporting the channel, Dan. And guys, if you got one of those memberships, be sure and say thank you to Dan. That was very nice of him. Thank you, sir. And welcome to the Melonheads, everybody. Armando Reyes, he says the pandemic changed everything. Work ethic in the U.S. Some children who were forced to do in-home learning never went back to school. Crime and theft. Yeah, unfortunately, I think history will look back on the pandemic and it will not view us favorably for the way we acted, for what we did to our kids, for what we did to our neighbors, for what we did to our seniors, our parents. I mean, hugging people through plastic. Oh, come on, guys. Come on. It was really silly. I agree. Look, work ethic, nothing helps work ethic like hard times. And I think hard times are coming. So Work ethic, that's a pendulum that's always going to be swinging one way or another. I'm not so worried about work ethic. I do think we hurt kids, not so much academically. I think we hurt kids socially, especially kids in those elementary school years who missed that critical year of development. I do worry about that also. And, you know, the in-home learning and never went back to school. We did see a big spike in homeschooling under that. There's good and there's bad with that. I know a lot of people who homeschool their kids. They're very good parents and they work hard. And I also have heard horror stories about some things that are happening in our school system. So I don't mind homeschooling providing a little bit of competition for our public school system. Let's put it that way. It's a way of the free market providing a check and balances against certain things that I don't agree with that are done in education. That being said, I send my kids to public school and I'm very happy with the school system where I live. It's one of the reasons why I picked this area. Thank you so much, Armando Reyes, for supporting the channel. AI is going to fix everything, Armando says. Oh, yeah. AI is doing wonders, right? Creating court cases that don't exist in legal briefs, convincing people to unalive themselves to fight climate change, miscounting the number of R's in strawberries. I think it's really amazing what AI has done for civilization so far. And I just can't wait to see what Sam Altman and his Malthusian cult of, effective altruism, what they come up with next. Really looking forward to it. Note sarcasm. Thank you, Armando, for supporting the channel, sir. And Armando's back again. Being homeless helps you save money. Wow. Talk about silver lining and looking on the bright side. I wish I had your optimism, Armando. But hey, man, that's one way to look at it. You know, maybe my problem is I'm just not optimistic enough. Thank you for that lesson in optimism and sarcasm, Armando. Nashville Pasta Man says the economy is starting to roll. Besant on Wednesday, starting to roll. Yeah, I don't think that's like a let's roll or roll tide, like a rallying cry. I think the economy is starting to roll over, as in head the wrong direction, is really what Besant was saying. Listen to some of the quotes from Scott Besant over the last few days. Sobering, realistic, horrible politics, but wonderful dose of reality. I mean, depending on your point of view, I'm really surprised to see these guys being so frank, to be honest with you. I think it's going to bite them in the ass. I think they're giving the press all the talking points they need to beat them over the head with it. But at the same time, at least they're not gaslighting people. Like that whole best economy ever. The problem isn't the economy. It's you, stupid. You spend too much time on Social Security. Why don't you understand how good you have it? What a refreshing change from the way they used to gaslight the heck out of everybody. That being said, I don't think they're going to get any thanks for it. Because, you know, when you're saying things like that and then somebody loses his job, guess what? You are going to be on the receiving end of all of their ire. I still think it's the right thing to do, though. So I hope they keep doing it. But, guys, you just cannot break an easy money addiction without widespread hardship. It's coming. Prepare for it. Thank you, Nashville Pasta Man. I appreciate the super chat and the support of the channel. And Alex L., thank you, sir, for everything you do for the channel. He gifted 10 Nobody Special Finance memberships as well. Thank you, brother. And guys, if you got one of those memberships, say thank you to Alex, as well as say thank you to the dad, Dan, both being very generous this morning. Thank you, sir. And Uncle Fedster, what's going on, Tio? He says, I received notification from German Cellcon, medically approved lithium-ion batteries, that they're moving manufacturing from China to Vietnam. Tariff avoidance. Absolutely tariff avoidance, although I don't know that Vietnam is going to be necessarily exempt from the tariffs. Watch that April 2nd reciprocal tariff deadline. I don't know if Vietnam has tariffs on American goods, but I do know that is people getting out of China because of, number one, the wage benefits of having your manufacturing in China are very quickly evaporating. As the standard of living of the average Chinese worker has increased, so has their wages. So there's just not as much benefit of offshoring to China as there used to be. But you're also seeing friendshoring or nearshoring. I don't know if I use the word friend to describe Vietnam, but it's certainly not China, and it is less of a trade war prone region. So Vietnam has actually seen a lot of benefit in the last few years of companies getting out of China, anticipating that, what would you say, the divorce between the U.S. and China economically. So Vietnam is on the receiving end of the benefits there. Not surprised to see that one. Thank you, Uncle Fester, for supporting the channel. M&J says, remember Brojo super chat yesterday. All right, Brojo Super Chat yesterday was asking about XRP. I don't recall off the top of my head what he was talking about, but it was about banks using XRP. Now, look, I'm not part of the XRP army, guys. I'm sorry. I just don't like XRP. I don't like the founders. I think Jed McCaleb is a freaking scumbag. I don't like what he did over at Ripple. I think XRP is way too centralized. Now, that being said, would the banks use it? I was very surprised. I looked into this. There are a lot of banks that are using XRP right now, or at least that are exploring it or have committees peeking into it. That kind of surprised me. That being said, XRP is not going to get a penny of my money. It's just way too centralized. And the fact that the banks like it so much probably tells me I'm on the right track there. The whole reason I like Bitcoin is because there is no central control, because the banks don't control it. Now, ever since ETFs and futures trading became a thing, that bull case has somewhat lessened, in my opinion. But XRP is pretty much as far from Bitcoin as you can get on the crypto spectrum. And I'm just not that optimistic about it. I don't like it. I own Bitcoin. I buy Bitcoin on the regular, just a little bit every week. That's part of a multi-year, even multi-decade strategy. I don't touch anything else. I still own a little bit of Ethereum that I mined and I just haven't sold yet. It's just sitting there. I don't touch any other cryptos. And I sure as heck will not touch meme coins or fart coin or any of that other stuff. Yeah, that's my take. I know there's a lot of people that are out there that are really bullish XRP. I'm just not one of them. Thank you, M&J, and thank you, Brojo, for the super chat from yesterday. And thank you, everybody, for having your coffee with the Melon Heads. I appreciate that very much. Thank you guys for the generosity in the super chats. And thank you to my magnanimous Melon Heads on Patreon and YouTube. Looking forward to talking to you guys at 2 p.m. Eastern Time today for our weekly get-together on Zoom. I'll be sending that link out momentarily, and there's links down below to that stuff, should you feel so inclined as well. Hi, Mom. Hi, Dad. Love you guys. Don't forget that like button on the way out. Until next time, live small and dream big.